Hey, hello, Jack Tubbs from the J Team at Realty One in Surprise, Arizona, wishing you a fantastic Monday. Hope you are getting prepped for this holiday week. I hope all your plans are going according to what you want them to do. I hope you're getting a chance to spend some time with family and friends. If not in person, at least get on a Zoom call, get on the telephone, FaceTime, whatever it is. Spend some time with friends and family while you can during this weekend. And I hope you have a turkey or something great in store as we celebrate Thanksgiving. Hey, I want to kind of continue on with what I've been talking about, what I started on Friday about how to prepare for a mortgage, how to find out how much we can borrow, how much home can we afford. And we talked about a lot of things. First, we talked about finding exactly what your entire income is, and that means all sources. If you have a couple different streams of income, whether it be rental, what you make at work, if you get commission income from something that you might sell, if you get alimony, child support, whatever it is, let's have a full accounting of that. And then find out what you owe, what your monthly outgoes are, so that you can establish a debt to income ratio. And as I said, Friday, that 43% is about where lenders feel comfortable continuing on a conversation with getting you a home mortgage, or finding a different program that might not be as favorable to you as a conventional or an FHA or whatever mortgage suits your situation the best. And then also, we want to make sure that we have everything in order when we talk to the loan officer. So in other words, we want to have 3 years worth of taxes. We want to have our pay stubs, our pay statements, and any other income statements. We want to have all the paperwork that goes along with proving what your income is, your debt to income ratio, and then last but not least, we want to establish what our credit score is. And as I was saying Friday, there are a whole bunch of apps out there that you can use to check your credit score, and they also give you some suggestions. If I pay down this credit card, it's going to boost my score by this much. All these other kinds of things. You want to find out if you've got kind of a baseline of what your credit card is, your credit scores. As long as you're in the 710 to 730 range, you're in pretty good shape, and it shouldn't be too hard for you to get a mortgage. And it's all just going to depend on what you want to spend and what you can afford based on your credit score, based on your income, based on your debt to income ratio. These are the things we really got to kind of get established, all the homework that has to be done before we go and talk to the loan officer. But the number one thing is getting all the paperwork together. Let's get in there well prepped for that first appointment, whether it's in person or whether it's online. Get it all emailed to them so they got a chance to digest it before sit down and figure out what program fits you the best, how much house you can afford, what kind of down payment you should kind of shoot for, and find out exactly what your monthly outlay is going to be so that you get a chance to figure out, well, it's not going to be exact, but an approximate of what your monthly outlay is going to be so that you can find out if you're comfortable with that. If that's something that you aspire to pay, you're going to be in your comfort level, that's going to still give you enough discretionary money to do the other things that you like to do, that you're not just tied to the house and you don't get a chance to go out, which wouldn't be much different than what we're going through right now. But nonetheless, when this passes, that you still have that free money to go out, and when we can go back to the movies, go to the movies, to go out to dinner, whatever it is that you want to do, go on those vacations, etc. So you want to make sure that you're comfortable with it so that you have that discretionary funds to spoil your family with, to spoil yourself with whatever it is that you like to do. So these are the things that we've got to do. Those are the main things. Also, do your homework. Kind of go online, do some searching, look at the different lenders that are out there. If you need some help, hey, feel free to reach out to me. I've got 3 excellent loan officers that I work with. They have different companies, different programs. Some of them even have a mortgage guarantee if you are on an FHA program, because some sellers are backing away from those because they're afraid of inspections, etc. Or they also feel that the people that have to take advantage of an FHA mortgage program, which are people that usually have maybe a slightly dinged credit, or they also don't have the regular down 20% or maybe 10% or greater down payment, and they're going with 3.5%, which the FHA allows. They kind of worry that maybe they're not credit worthy, maybe that mortgage won't close, and we'll find that a lot of lenders have a guarantee that if a mortgage doesn't close, there's like $2,000 to $10,000 guarantee that they'll give to the seller if they can't close the loan after they've done the pre-approval process. And part of that is going to be a pre-underwriting. They're going to look at your credit. They're going to put you fully under the microscope, scrutinize everything. They're excuse me. They're going to be completely competent that you have the ability to pay those payments and to pay back that mortgage. as it sits when you start. And that's not even talking about any refinancing or any extra down chunks you get to put down. However, but you know what? Let's do our homework first. Let's find out the programs that fit you the best. Even some of them will have online calculators to give you kind of a better idea of what you might qualify for and what, and just on a basic, what your payment might be. And then let's not just settle for one program. Continue to get out there and look at how you're going to finance that property, because there are some great programs out there that are from different lenders, such as if you're going to be out in a more rural area, depending on the population density, there's a program offered by the United States Department of Agriculture called the Rural Development. And that basically was, when it was created, was for family farms to have the money to invest in family farms to improve that business, to improve the agricultural business throughout the United States. But now they've kind of spread out that even people who just want to buy a residence where the population density is less and is further outside the services of an urban center such as Phoenix, that they have special rates and they have other special things that go along with it. Might be something you want to check out if you're planning on moving out, which a lot of people are, to a more urban area to kind of get away from being off, they're kind of heading towards being off the grid, whatever. A lot of people are like that. And then of course there's different FHAs. There's the 304K, which basically if you find a property that needs like a new kitchen, you can kind of sometimes build up the rehab cost into that mortgage, and that can be part of your payment, and that won't be able to be something you'd be hit with. The only stipulations that is, it has to be a licensed and bonded contractor that brings forth the estimate that you're going to use, and they have to do the work because they're going to write the check directly to that contractor. So they have to be licensed and bonded, and they have to have a clean record. They can't have a ton of complaints against them, or the FHA will say, nah, find somebody else, or they might just reject it altogether. Also, I talked about down payment. We definitely want to find out where, we want to have the major down payment because it's going to open a whole bunch more options to you as far as how you finance your house. Also, it brings forth a lot more comfort to a seller when they see the kind of down payment that you're going to put down on the house. It just oozes like, I've got money and credit if I can put a larger down payment in. And it also opens up other programs to which you can use to finance for. There are some great, like 10% down conventional programs out there with very favorable mortgage rates or interest rates, etc., that if you've got a good down payment, you can take advantage of these different things. If you've got at least 10%, you can take advantage of it. If you can go a full 20% down payment and cover your closing costs and all these kinds of things, man, you're golden. It really makes you appear like you're on top of your game and brings a lot of confidence to a seller that you're going to be able to close and be able to afford the property that you want, that you look at. Now, after we do all this stuff, then it's time to have that meeting with the loan officer and let them help you decide how much you want to spend so you know where your payments are, because I've had people who could afford a lot more house than what they were willing to pay for because they looked at the payments once they took taxes, maybe HOA, insurance, and all these other things into consideration, find out what their monthly payment's going to be. And they said, you know what, as opposed to spending $350,000, we're more comfortable like $275, $300. That's where our payment comfort is. So that's what I need. That's the best thing for you, is to figure out where your payment comfort is going to be. And with the rates that we have right now, you have a huge amount of buying power. On average, it works somewhere between $35,000 and $50,000 more than what you would have just a few years ago been able to buy, because the rates are so low. So just take all that into consideration, but make sure you got a payment. As I said before, you want to make sure that you have that discretionary income to go and do what you want, to continue to have those life's comforts that you might give up if you making all house payment, if you're house poor and you have no extra money, and especially when emergencies come up like cars breakdowns, etc., you want to make sure that you've got that cushion there just in case. So these are some of the other things to consider as we move forward, getting ready for a home, or getting ready for a home mortgage. And then we'll talk about a couple more tomorrow, and we'll probably end it up then. I've got about 2 or 3 more. We'll have a I'll come in again on Wednesday and talk to you, but after that, Thursday and Friday I'm off because I'm cooking the family dinner, and I'm going to be busy Thursday, and then Friday I'm probably going to be in a turkey coma, so I won't be any good for any advice. But anyways, if you have any questions about lending, if you have any questions about real estate in general, whether it be residential, retirement, commercial, please feel free to call me. be more than happy to answer your questions. You get a hold of me directly at 623-252-4061. That's actually the office number, 623-252-4061. You can call me direct at 248-330-7972. That's 248-330-7972. Or you can email me, jack@thejteam.house. That's JACK at THE, the letter J, TEAM.house. Jack@thejteam.house. I'd be more than happy to answer your questions, or if you need a referral to a lender, I'd be more than happy to help you. Like I said, I've got 3 excellent loan or mortgage brokers out here that I work with, and like I said, I think 2 of them offer the closing guarantee to make sure that if you can't close, they're going to pay the seller. Like I said, somewhere between $2,000 and $10,000, depending on the size of the loan and all the rest of the terms on the loan, or on that purchase. So, this is Jack Tubbs with the J Team at Surprise, Arizona. Wishing you a fantastic Monday. Hope you're getting ready for Thanksgiving. Hope everything's going according to plan. I'll see you tomorrow about this time with more about how to prepare for your home mortgage. Have a great day. Bye-bye.